Let's get straight to the point. The markets are manipulated against you. Every single day, the market is manipulated in some type of way, and it's meant for the average retail investor like you and me to lose money. If you are losing money, it's by design, not by luck. While your balance is going down, billionaires and hedge funds are making millions. How do these hedge funds manipulate markets? How can I tell when a market is being manipulated? Wash trades. Wash trades are basically trades that will cancel each other out to artificially create volume. So what these hedge funds will do is go to one broker, buy 500,000 shares, then go to another broker and sell 500,000 shares, canceling the orders out. So they didn't lose or make any money, and they aren't risking any money either. Where in the 90s, if a hedge fund artificially made the price go up by investing a ton of money all at once, there is risk involved because the stock could potentially drop right after they entered. Using this technique, they have no risk whatsoever, but still have the ability to manipulate the market. How so? Well, when you buy 500,000 shares, then sell 500,000 shares, it won't move the price. But what it will do is create huge amounts of volume. And as we all know, tons of scanners and indicators use volume as an important metric. So whenever volume has a huge increase, that's just more and more investors seeing that specific stock on their watch list. And what happens when a ton of investors see a stock on their watch list? More activity, creating even more activity, and more activity, creating another snowball effect, pumping the stock up. So hedge funds manipulated the market by artificially creating volume to get it seen by many other investors. And at this point, the hedge fund is already in a position, but they let the retail investors do all the work for them, so they don't have to risk as much, which is a pretty common trend with most of these manipulation tactics. They almost start to push the snowball down the hill, then let the others keep rolling it, taking all the risk. So how can you tell when this type of manipulation is happening? Well, it's pretty simple actually. Let me show you. If you ever are looking at your chart and you see a huge amount of volume coming out of nowhere, creating a new crazy high for volume, but then you look at the candlesticks and the price really wasn't affected at all, and there's just a really small candle sitting there. This, more often than not, is a hedge fund or firm trying to manipulate the market. I should also be clear, just because this happens doesn't always mean the market is going to go up every time. Sometimes investors won't take the bait and the stock won't move at all. But it's important to have this in the back of your head when trading. If you see a huge amount of volume come out of thin air and there's just a small candle, it's a good chance there's manipulation occurring. And the scary thing about this type of market manipulation is that it's completely legal. Has this ever happened to you? You're in a position with a specific company that you really like. They have nice earnings, good management, and the chart looks really good. You set your stop loss pretty low, so it doesn't get stopped out. But at the same time, you want some type of protection if the stock randomly decides to drop a huge amount. Well, fun fact, a lot of traders are doing the exact same thing. You get on the next morning and see there was a huge drop in price, where the price dropped a ton, hitting your really low stop loss, making you sell all your position. But right after the price went below your stop loss, it bounced right back up to where it was before. You check your news screener and there was no bad news or any reason for the stock to fall. It just randomly fell out of nowhere. You're extremely confused. This, more often than not, is a form of market manipulation. Hedge funds have a lot of information that the average investor doesn't have. One of them is they can see exactly where everyone's stop losses are. What hedge funds will normally do is create a huge short position, making price fall a pretty decent amount. But most importantly, what they're doing is if they see an area where there's a huge amount of stop losses, they'll do everything within their power to get the price down to those stop losses. Once they do, the stop losses do the rest of the work for them, just adding fuel to the fire and making the price go down even more. Once it reaches the bottom, they exit their short position and enter a long position, while the market heads back up towards where it was before, letting them profit from both a short and a long trade. Now, what's so scary about this type of manipulation is that it's very hard to predict. It can happen at any time, and you can't really tell when it's gonna happen. And sadly enough, there's not much you can do here, other than not panic sell or not initially staying in a trade too long. There's not much else you can do, which kind of sucks, I know, but there is some sort of way you can tell when it's happening. It's almost the exact opposite of the pump example I was talking about before. If you see a huge red candle, but there is very little amount of volume, these are some of the characteristics of market manipulation to the downside. After the whole GameStop and AMC situation, market manipulation is at an all-time high. And it's not because more and more hedge funds are doing it. It's because of you, the average investor. After the GameStop situation, retail investors started taking the strategy of just blindly following random traders and news. What's happening is big institutions are paying influencers, using bots, or media companies, and making companies look much bigger than they really are. The problem is, a lot of people nowadays will just trust another person's due diligence and just blindly follow them. What's even worse is after they enter the trade, they end up becoming extremists about the stock and start spreading fake news themselves. And the only way you can avoid this is by doing your own due diligence and research.
Go. Less than abundance. Look who raised from the dungeon. Still come through when the